Yesterday, TCS's Q2 fiscal year 25 earnings were released, and today the stock has plunged 2%. Now, so far in 2024, the TCS stock has underperformed the Nifty IT index. In this video, we will understand the factors driving down this underperformance. But before we dive into the numbers, let me give you a quick roundup of what's happening with the IT sector in general. Now, we've all seen how tough the global and economic environment has been, with central banks, including the US Federal Reserve and our very own RBI, raising interest to their highest levels in years to bring down inflation. Now, when interest rates are high, borrowing becomes more expensive, and that leads businesses to cut back on investments, including their IT budgets. Now, this directly impacts Indian IT companies because when businesses spend less on technology, fewer contracts are signed and ongoing projects often get delayed. Now, since a significant chunk of Indian IT companies' revenues come from clients in the US and Europe, the weak demand from these regions has been a major struggle for quite some time now. So now let's zoom in on TCS's Q2 results, which came out yesterday. Now, when it comes to revenues, TCS reported a 643 billion rupees of revenues, which is an increase of 5.5% year over year. On a quarter-over-quarter basis, the company's revenue grew by 2.7%. Now, looking at different regions, TCS saw impressive growth in India with 95.2% increase year over year. However, North America saw a decline of 2.1%, and this decline actually accelerated compared to the previous quarter. Now, this is important since North America contributes almost 50% to the revenue share of TCS in any given quarter. Now, in terms of industry, the banking, financial services and insurance sector, which is an important vertical for TCS, makes up about 31% of TCS revenues. Now, after being beaten down, this vertical saw positive growth in the quarter. Now, the consumer business too saw positive growth, but technology services sector saw a decline, with communication and media experiencing the largest drop. Now, coming to TCS's operating margin, which is the profit they make from their core business activities, and higher the number, the better. Now, TCS's Q2 operating margin was at 24.1%, down from 24.7% in the preceding quarter. The net profit too missed street estimates due to third-party costs. Now, coming to contract value. In Q2 fiscal year 25, the total contract value of the company's deal wins came in at $8.6 billion. Now, this was about 24% lower than the same period last year. The management has said that the market conditions are currently pretty volatile, and because of this, deals are taking longer to close. Now, what this means is that the conversions of these deals into actual revenue growth is being delayed, and that's something we need to keep an eye on. Now, Tata Consultancy Services also reported an increase in its headcount for the second consecutive quarter. Now, so far, TCS has made a net addition of over 11,000 employees in the first 2 quarters of fiscal year 25. This is notable because it comes after the company ended fiscal year 24 with about 13,000 fewer employees compared to the previous year, a downturn that was the first in 2 decades. Now, this uptick in hiring could also signal that TCS is expecting demand to pick up in the near future. To summarize, TCS reported a mixed set of numbers this quarter, missing the estimates on profit margins. Now, one of the key metrics, total contract value, also came in at $8.6 billion, which was also below estimates. This figure is also noticeably lower than the 8-quarter average of approximately $9.5 billion, signaling a slowdown in deal wins. However, there were also a few positive aspects worth highlighting. The company's employee headcount increased on a quarter-over-quarter basis, marking the second consecutive quarter of growth. Now, this signals a possible strengthening in business momentum. Additionally, the banking, financial services and insurance vertical, one of TCS's critical business segments, also was positive in this quarter. Looking ahead, there's still a positive outlook for TCS and the IT sector as a whole. With US Federal Reserve cutting interest rates, and if the global economic environment stays stable, there's a good chance we'll see growth pick up again. So in conclusion, TCS is facing some challenges, but the long-term growth story of this company is still intact. However, there are several key factors we need to keep a close eye on. More IT companies are expected to release their results in the coming weeks, and this will give us a clear picture of where the overall IT sector stands. Now, we should also track whether new deals are slowing down or getting cancelled. This will be crucial in assessing the demand for IT services globally. It's also important to watch how much revenue TCS is generating from its largest clients and main industries. And if these revenue streams remain strong, it could be a good sign, but we also need to see if the profit margins are holding up. Now, another key indicator will be whether IT companies continue to hire more employees or if there is significant employee attrition. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.